In the previous class, you learned some basic fundamentals of cost accounting, what is your syllabus, and some differences between financial and cost accounting. Let us continue with some theory again, starting with conversion cost. It is the cost associated with converting a raw material to a finished goods. To do this, what all resources or cost you will incur? You will incur labor, you will incur expense, and where this will be manufactured? In the factory. So you will incur manufacturing overhead. So conversion cost is the sum of direct labor, direct expense, and manufacturing overhead. So remembering this formula is very important because some of the questions, problems, they will not directly ask. They will indirectly give conversion cost and ask you to solve for direct labor or overheads. Next definition with respect to cost control and cost reduction. Control is a temporary process. Basically, it is to regulate the cost, total cost, to achieve some target. Every organization makes budget at the beginning of the year. During the year, when they look at what is the actual cost, and they will see there is a difference, we are not going as per the plan. So they have to take certain measures which will bring down the total cost. For example, changing of the supplier. Let's say they got an alternate supplier who will supply for cheap. So they will go with that supplier. So it's a temporary measure for that year. Whereas the cost reduction is a permanent measure. It is undertaken to reduce cost of the product. Here it is total cost for that year. Here it is the cost of the product. Example, they will improve the design. They will change the type of material, better design. What it does, it brings down the cost of the product. We will see major differences between cost control and reduction in some time. Cost audit, it is the verification of correctness of cost account. Cost driver is the factors influencing the level of cost. Example, raw material prices, then foreign exchange rate, then market forces. All these are cost drivers which influence the level of cost. Some more definition. Sunk cost. What is sunk cost? Sunk means which is already gone down. That means it is irrecoverable and it has no significance in decision making of the organization. This is already incurred. So we will not incur it again and we will not consider it again for decision making. Next is imputed cost. It is an imaginary cost or notional cost. That means there is no actual expenditure happening. For example, when you are purchasing raw material, there is an actual cash you are paying to the supplier. But here in imputed cost, there is no actual expenditure. For example, you have a depreciation. You have purchased a machinery. Because of its use, wear and tear, it has to be depreciated. But next major definition, responsibility center. From examination point of view, they may ask which of the following is a responsible center or give an example. We will understand it in simple terms. It is basically a cost center in the organization which has its own goals and it is held accountable for its performance. For example, manufacturing division of a car company. So what can be the goals of the car company? So the goal can be its production. Production 1 lakh units is one of the goal, or revenue 100 crore. So this is a goal. So to achieve this goal, it will have its own policies and procedure. Okay, and it is allowed to make some expenditure. At the end of the year, it will be assessed against these goals, how it has performed. And whoever is the head of that responsible center will be held accountable for profits or loss. That is a responsible center. Audit and cost driver, they've already seen. So now let us understand the difference between cost control and reduction. As I already told, reduction is a permanent and control is a temporary measure. What the control works on? Total cost reduction, and the same place, what does reduction work on? Decreasing per unit cost. This is major difference. Pay attention. How the total cost of the production is brought down in cost control? It's a temporary process. What they will do? They will do some temporary measures like supplier change. Correct? Source they will change. They change the payment terms. All these are temporary. The goal is to reach a specific target. What is this specific target? Budget number. Cost control is a preventive function. That means They know that they are not able to reach the budgeted goal, hence they take certain action to prevent from that happening. The cost control does not guarantee quality. They may achieve quality, but it does not guarantee. When it comes to the cost reduction, it is a permanent process. Why? Earlier you had made a product, okay, and now you have changed that product in its shape, size, and material. Because of this, the cost has gone down. So that's a permanent process. Then it's a continuous process because the engineering department will continuously look at how to improve, how to become an efficient product manufacturer. Cost reduction is a corrective function. That means they release a product and they get the feedback from the market through various methods, and they the engineering department works on it, the process department works on it, and they change the process so that the cost of the product comes down and it guarantees the quality and maintenance of the product. Now let us study what are the different methods of classifying the cost. So at first you can classify them based on nature of expense: material, labor, expense. Very easy to remember. This is the first method. I will not go deeper on it. Next is classification by relation, how they are related to the cost center, whether related directly or indirectly. Further, they can be further classified into direct, material, labor, expense. This put together is called as prime cost, all direct material, labor, and expense. All indirect labor expenses collectively called as overheads. This is the second method of classifying the cost. Now, third method, classification by function. So the word function means what is the function of that department or the cost center. So read whenever you have functions, we read it as department. Which all department are there in an organization? You have production where the manufacturing happens. Then you have administration. So in administration, which all type of people or type of work happens? You have your management or your board of directors. Then you have HR. Then you have accounts. Then you have purchase or procurement. All of these departments come under administration. Next is your research and development. Basically, here you have your designers, your engineering department. All the costs incurred for this type of work, R&D, are classified as R&D costs. Next, you have selling and distribution. Selling is nothing but your sales and marketing. This is to find your customer and sell the product to your customer. So it will have your typical salesman and sales outlet, all the expenses related to selling. Distribution is once you have identified the customer and the customer has made the purchase from your factory to the customer, the transportation and other things are coming under distribution. Fourth type of classification is by behavior. What is the behavior of the cost with respect to the output? So behavior can be fixed, it is variable and semi-variable. So let's learn one by one. To understand, you come to the graph at the bottom left. So on the x-axis, you have number of units or output. And on the y-axis, this is your cost. So as the organization manufacturer the products, let's say 1000, 2000, at all the levels, your cost is same. So such type of behavior is called as fixed cost. Classic example is rent. The factory rent does not vary if I produce 1000 or 2000. It stays the same. Same thing is the salary. So if I'm producing less, I will not pay less salary. Correct? So that is the behavior. It is fixed. Next is the variable cost per unit. Here you have x-axis. This is again y-axis, which is your cost. And this is your output. As I produce more, I will incur more. Next, I'll produce 2000. My cost also increases. Such type of behavior is variable cost. Example is direct material. All the raw material which goes into the product, I have to produce more means I need more material. So that means I have to incur more cost. So that is direct material variable cost. When it comes to semi-variable cost, here it involves both fixed and variable. Hence it is called semi-variable. How it can involve both fixed and variable? It usually varies in certain slabs. So example is electricity charge. You might have observed the electricity charge is charged with respect to certain slab and it remains fixed within that slab. As the slab changes, it goes to next rate. Then again, until it reaches the next slab, it remains fixed. So such type of things are called as semi-variable cost. When certain costs are incurred, it is very essential to segregate it into fixed and variable cost. So how to do this? Using a formula. So focus on this question. Pause for a minute and take a screenshot of this or write it down. In this, let's see what information is given. So during one period, you have some data. January, 60 table are produced, total cost of 1700. Then in February 2022, 70 tables are produced, total cost is 1900. So this is not a straight line. So in such case, you have to find out what is the fixed cost and variable cost. How to do this? Write the data for two periods. So first you will write cost, then you will write output or units. What are the periods used here? You have Jan and you have Feb. So cost for Jan is 1700 and output is 60 table. Similarly, cost for Feb is 1900 and output is 70 table. Using this formula, you can find out what is the cost per unit, variable cost per unit. How to do this? Delta cost. Delta means difference. So it is put in a modulus, means it is always a positive value. So first is delta cost. That means what are the things you have to consider? You have to consider change in this 1700 and 1900, difference is 200. Next, divided by change in output. What is the output? You have 60, you have 70, difference is 10. What you will get? 20 per unit. This is always per unit cost. Now this is variable cost per unit. What is the total variable cost? Take any one of the case. Let's take the case of January. January 60 produced into 20 variable cost. You will have 1200 is total variable cost. What was the total? Total is 1700. Means the difference is fixed cost, which is 500. If you put it in February also, your fixed cost, you will get the same data because it is fixed. So remember this formula, it is very important. Next type of classification is with respect to management decision. You have marginal cost. Here the focus is solely on variable cost. This you will learn in detail in your section 3. Next is opportunity cost. So management are usually, when they have to decide, they will have more than one options. So they will have option 1 and they will option 2 and they will have resources to go with only one option. If they go with option number 1, they cannot go with option number 2, or if they go with option number 2, they cannot go with option number 1. In such case, whatever they are not able to go with, that is called as foregone opportunity, and the cost associated with is called opportunity cost. In simple terms, it is the cost of next best thing. Then you have differential cost. What is differential cost? It's also called as incremental cost. So let's say you have option number 1 and you have option number 2 again. If I go with option number 1, I will incur X rupee. If I go with another option, I will incur X plus Y rupee. So this incremental cost, so the change in that is called difference. So that differential cost, how that is used for making the decision is called classification of cost by differential. Next is you have replacement cost. It's a cost of, replacement cost is a cost at which the material identical to that is replaced or purchased at the date of valuation. So that is your replacement cost. You have two options. If I go with option A or option B, if I replace A with B, what is the additional cost I have to incur? That is a replacement cost. Sunk cost you have already learned. It is already gone. You cannot recover it. Normal and abnormal cost. So normal, as the name suggests, during the normal production, normal cost incurred is called as normal cost. Abnormal, any variation with respect to the normal is abnormal. In detail, you will learn this in your process cost. Next type of classification is nature of production. So majorly you have batch cost and joint cost. Then you have process cost, contract cost, and operation or operating cost. There is no need to remember this because your section B is nothing but all of this. So in section B, you have 5 chapters which focuses specifically on each type of nature of production. Okay, so far this is the class. What did you learn? You learned different types of classification, how to segregate fixed and variable, and some definition like conversion cost, what is cost control and reduction. All of these are very, very important. We'll meet in the next class.